Okay, thank you, Monica. This is a very challenging session. Good afternoon, selamat siang Bapak dan Ibu sekalian. Salam sehat, salam sejahtera buat kita semua. Okay, thank you everybody still staying with us in this place despite a very challenging time in the afternoon, especially after lunch. So this is actually in the context of the celebration of the 68th anniversary of IAI, and this is the second panel discussion with the name of Beyond Reporting, Proactive Sustainability, Risk Management and Compliance for the Impact. So if we are looking at the new era now, we are not just focusing on the reporting itself, but we have to anticipate the risk, the business model that entities have to face, and also how to create and getting a credible impact. So we have with us the four panelists, which are going to talk about. The first one is around the reporting, which is Ibu Rosita. I think everybody has known her. She's well known in Indonesia. And she is, like just now mentioned by the by the MC, that Ibu Rosita Sinaga is the chairwoman of the IAI Sustainability Standard Oversight Board, and currently also a managing partner in the consulting firm of RSM Indonesia. She is co-founder of the Task Force of Comprehensive Corporate Reporting with me last December 2022. So it's actually 5 years ago, IAI has already had this task force, and we name it not sustainability reporting, but we name it as the comprehensive corporate reporting. And it is proven now that actually sustainability reporting does not stand alone, but it has to be jointly together with the financial statement. So previously, Bu Rosita also had the Indonesian Financial Accounting Standard Board during the very, very key phase of that IFRS conversion. And then our second panelist is Ms. Claire Grayston. She is a principal at the International Auditing and Assurance Standard Board in IFAC and co-leading the development of the ISSA 5000. And she has a long experience in audit and ESG assurance policy in Australia. The third panel is Bapak Darwin Cyril Noerhadi. I think everyone in this room should know him because he is a best investor in Indonesia, one of the best, Pak Cyril. And thank you so much of joining us as an accountant here, because Pak Cyril is not accountant. He's an engineer background. But he is a businessman, ya Pak Cyril, ya, by design. So Pak Cyril is an independent member of the Supervisory Board of Indonesia Investment Authority, or INA. He brings deep capital market and governance experience from the roles including the CEO of Indonesian Stock Exchange and the Group CFO of the Medco Energy. The last one is Pak Pulkit. He is an ACCA Director of Asia Pacific, leading strategy and partnership across 15 markets. He worked closely with regulator, employers on the ESG capability building and the future skill agenda for the accountant. This session, the second panel, will be quite different compared to the first one, because in the second one, we have two different segments. The first segment is around 40 minutes, 10 minutes given to each of the panelists when they are going to present the setting of each of them. And then after the 40-minute presentation, then we will have a discussion on the topics that have been discussed. So hopefully, because this is afternoon session, we do like this to make all of us in this room still awake and still pay attention to the contents of the discussion in the afternoon. So without further ado, I would like to invite Ibu Rosita to present her view on this perspective. Please, Bu Rosita.
Thank you, Bu Linda. May I just stand up because we are now very sleepy. I want to make it more interactive and attractive. So good afternoon, ladies and gentlemen.
Good afternoon.
Yeah, so if you read the theme of this panel, beyond reporting, proactive sustainability, risk management, and compliance for impactful investment. So when we attended last year celebration of 67 EIA birthday, I think I was also one of the panel. At that time, we have launched the sustainability reporting roadmap, which at that time we aim to have the adoption of IFRS S1, S2 by the first semester of next year, which is this year. So we are proudly managed and achieved that. We launched the PSPK 1 and 2, I think around July or August. And the most challenging part is to make everybody agree that we want to move forward to that direction. We actually collaborate with all regulators, which include Ministry of Finance, and then OJK, and also the Central Bank, Bu Linda, and agreed that Indonesia is moving forward to the PSPK 1 and 2. So that's a very important and very game changer. Why? Because by 2027, we will change from POJK 51 based on inside-out approach to be outside-in approach. Now, why the theme is beyond compliance? If you look at, because this is a new standard, how come you are talking about beyond compliance? We have never done this before. We have to go beyond compliance. There are two things that we need to convey the message. First, what has changed because of this issuance of PSPK 1 and 2? Number one, this is a global baseline standard. Before, when we are using, or not before, currently we are using POJK 51, our POJK 51 is a very local-centric standard. So when investors read our report, the sustainability report, they cannot compare it with other countries' companies because every country has their own standard, right? So now, when we launch our sustainability report in 2027, your report is actually more comparable with other companies in other countries, which now more than 130 countries has committed to adopt that standard. I think that's the big change, number one. But the most important is actually the change on the framework. Because before, when you read the POJK 51, it's more on what you have done in terms of the sustainability, but never talk about what will be the impact to your performance, current, medium, short-term, medium, and long-term. So that is not connected with your financial reporting. But now under PSPK 1 and 2, you are required to link whatever your strategy, your risk management, and you have to think how that will impact to your financial performance. So what is the message? How you can disclose the sustainability report to ensure that you meet the objective of that standard? I think that's, we call it beyond compliance. Because if you just do it to comply with the regulation, because I heard now OJK is revising the POJK 51 to align with the PSPK 1 and 2, but then if you just just go there and then try to comply with the regulation, you will not meet the objective. Why? Because the objective of this change is for you to get the benefit. What is the benefit? The benefit is because now investor can compare your sustainability reporting with other company in other countries, and now the investor can link that into your financial performance. If you do it right, not only compliance, you will get the utmost benefit. I think that's the mindset that you want to convey. So please think carefully when you implement the PSPK 1 and 2. Definitely people is starting to complain, Ibu Rosita, what is this? What is that? We are now dealing with extra costs to comply with PSPK 1 and 2, right? Yes, there should be extra costs. But then you have to strategize how your extra costs will convert to additional benefit for you. I think last week, because we are the KNKG conducted annual report award, one of the question that we was asking is how do you prepare to comply with PSPK 1 and 2? And I convey the message to all the participants, but there is one banks which is very impressive. They said, we have done it 5 years ago. And they said that, yes, it includes significant extra costs. So if you ask me whether it will include extra costs, the answer is yes. But then, because they consistently, not only just compliance, they believe that by doing this, they will get the benefit. The tone from the top has successfully converted this to be a culture, the sustainability culture, not only at the top, but also to all management employee. Now, after 5 years, they can convey to us as the judge, they are starting to get the benefit. So meaning, when you do it beyond compliance, this is not because you don't have the opportunity to get the benefit. It is because you are really get the benefit, because now the capital will be allocated to company who really can prove and show that you really internalize your strategy and risk management to ensure your organization is sustainable. I think that's a very important message. Next. Okay, so what you have to do to go beyond compliance? I think first thing, Indonesia has issued this, which will be effective in 2027, but because our organization include varies of scale, varies of maturity, definitely there are so many relief that we put in the PSPK 1 and 2, right? For example, we are not required yet for the assurance, right, Ibu Linda? We are not required the scope T, also the protocol, the GHG, how to calculate, also something that we give you some leeway. But now, if you want to go beyond compliance, the question is, how come you can get the benefit? The answer is, if the investor can trust your information and give you more allocation of capital, right? So if that is the case, then you need to think how to strategize your sustainability reporting in 2027, so you can select some option. Maybe not everybody in the company will select consistent approach. Because, for example, if you are a company like banking, which is highly on scope 3, for example, you should put effort to collate all data to ensure when you disclose, the scope T is part of the 2027 sustainability reporting. But if you are more on the company, which is the scope T is very insignificant, you don't need to put effort in scope 3. you start with scope 1 and 2, but you have to strengthen your internal control and governance to show to the investor that we are managing the sustainability and internalize the effort, right? So I think that's one example how you can strategize your sustainability reporting approach from now until 2027, so you can do beyond compliance, extra cost, but you can get the benefit before you ensure the sustainability report is really tell the story that make the investor trust your sustainability report. The number 2, the most important, is the assurance. If you are the investor with the previous story of greenwashing, and now PSPK 1 and 2, you just release the report without assurance, and there is another company tell the story with assurance, which company that can get more trust from the investor. So it is very important for you, even though in our PSPK 1 and 2, we put some relaxation that for the first 3 years you don't mandatory need to have assurance, but if you want to get the benefit, you need to think how to do it gradually and ensure there is assurance embedded in your sustainability reporting. And maybe after this session, maybe Claire will explain about the assurance standard, right? This is very important infrastructure that we need to build in Indonesia. We actually, IAI has issued the standard, but then what? If we don't have the right regulation on the assurance side, we don't have the right implementation of assurance side, meaning we cannot improve the quality of sustainability reporting, then at the end of the day, there is no benefit for you to put effort to go beyond compliance if there is no trust from the investor. So need to sit together, regulator and also the ERP as the Public Accountant Association, how to build the ecosystem, whether we need to give extension to non-public accountant for the assurance, and also for the preparers to select the right assurance provider to ensure the quality of sustainability reporting. I think I will stop there, Bu Linda, and I will, maybe next we can discuss further in the question and answer. Thank you.
Okay, thank you, Ibu Rosita, for framing the SPK not just as a rule book, but as a bridge actually to integrated value creation and later on to be the competitive advantage of the entity. So just now Bu Rosita has already mentioned, it's not expenses, but it's a long-term investment. Okay, next we move from what we disclose to how we build trust and reliability in this information and to combat actually the greenwashing issue that have been quite long time, maybe more than 10 years, from the academic viewpoint and also from the practical viewpoint. So Claire will discuss about what have been done in the IAASB, the Auditing Standard Board, with these matters. Please, Claire, time is yours.
Right, thank you very much. I was hoping this mic would work. I didn't know how to turn it on. So this leads very neatly into, if we can move on to my first slide, please. Oh, you're going to change it for me. Thank you, Rosita. So it does lead on, when we get the slide up, to the global standard for trust, which leads in very much to what Rosita was speaking about, and that is ISSA 5000. So I'm very, very pleased to be here with you to talk about ISSA 5000, and I'm going to explain in a moment what that is. Having co-led the project at the International Auditing and Assurance Standards Board to develop this first global standard for sustainability assurance. So, following the release of the standard, I'm now focused on its adoption and implementation globally. So this is a critical element, this engagement with you and other stakeholders to understand where support and clarification is needed in understanding the standard. But what I'm going to talk to you about today is what is ISSA 5000 and also how ISSA 5000 provides the confidence in the reliability of sustainability disclosures, what the assurance practitioner is required to do. That gives some insight into what preparers can expect from sustainability assurance engagements. So, what is ISSA 5000? So I said it's the first international standard on sustainability assurance. It's the general requirements for sustainability assurance, and it provides the global baseline to match up with what Rosita was talking about of your new standards that align with IFRS S1 and S2. So it applies, it's a comprehensive standard. It covers the entire engagement. So it's equivalent effectively to the suite of international standards on auditing. It applies globally to sustainability information prepared under any suitable reporting framework or other criteria. Including, of course, well, your current reporting under POJK 51, but more importantly, reporting under your new standards, PK 1 and 2 here in Indonesia. So it covers both limited and reasonable assurance engagements. And this is a little different than what you see in the international standards on auditing and review engagements, which show those separately. This is deliberate, and I'll explain why. But firstly, I'll just mention that these limited and reasonable assurance requirements are very clearly distinguished in the standard, and they're set side by side so they're directly comparable. And we use prefixes L and R to be clear about which requirements apply to each. But the key reason why those requirements are put in the same standard in ISSA 5000 is so that to allow for many jurisdictions that are starting with limited assurance, and then over time the intention is for those jurisdictions to step up to reasonable assurance in the future. And so having both sets of requirements in the same standard allows for that, that transition from limited to reasonable assurance and that direct comparability between those two sets of standards. So the standard's available to, oh, could we go back actually? Sorry, I'm on the previous slide still. Thank you. Sorry, just finding my place again. So it's available to all practitioners, so whether professional accountants or other assurance practitioners. And it's up to the policymakers in each jurisdiction to determine if they're mandating assurance, who can conduct those engagements and whether there's going to be any accreditation needed. But this has been important in creating a level playing field for all practitioners. So quality is established in ISSA 5000 specifically by requiring compliance with relevant ethical requirements. And I'm sure you'll all be familiar with the IASB Code of Ethics, and that is the primary source of relevant ethical requirements, although we do allow for ethical requirements at least as demanding as that. It also requires the firm to have a system of quality management in place under ISQM 1. And to apply engagement quality management, and that is embedded within ISSA 5000. So these requirements include the engagement leader and the engagement team and external experts to collectively have sufficient competence in assurance knowledge and skills and appropriate sustainability competence. So that's absolutely critical to underpin the quality of these engagements. The standard is scalable to assurance on specific sustainability information or a complete sustainability report as you'll see under your new standards. Next slide, please. Are you managing my slide? Who's managing my slides now? Oh, thank you. You shouldn't have to do it, Rosita. So, assurance is a key element of a strong global sustainability reporting ecosystem. Now, I'm very much mirroring what you've already said here, Rosita, but it definitely is a critical component. That doesn't mean that all of these things need to kick in immediately on year one, but that definitely is the roadmap that you need to be headed on. So, what is that global reporting ecosystem comprise of? Firstly, a suitable reporting framework. Well, you have that now in Indonesia. Robust assurance, which is what I'm talking about under ISSA 5000. Ethical requirements, such as the IASB code, are supported by jurisdictional or regulatory oversight. So ISSA 5000 provides the confidence in the reliability of sustainability information disclosed as it establishes that global baseline for high-quality, robust sustainability assurance. That is assurance that provides for reasonable limited assurance, as I mentioned, equivalent to audits or reviews of financial statements, as it's based on the same foundational concepts in the ISSAs and the review standards. The sustainability assurance engagement results in a conclusion on whether the sustainability information is free from material misstatement, whether due to fraud or error. So again, very similar to the auditing and review requirements. The standard enhances trust and confidence in reported sustainability information material to intended users, as the assurance conclusion is based on a robust risk-based approach provided by an independent, of course, because they're following the ethical requirements, an independent practitioner. It provides for consistent assurance. This enables a level playing field, so for all assurance practitioners, that's underpinned, as I said before, by ethical requirements and quality management. So this consistent level playing field is very, very important to make these engagements comparable across jurisdictions, across entities, and around the globe. In addition, adopting a globally acceptable sustainability assurance standard in ISSA 5000 avoids regulatory fragmentation. Again, that's a point that Rosita made about the reporting standards. Applying a standard that's consistent across jurisdictions and between entities. It promotes interoperability and comparability of those assurance reports across those jurisdictions and entities, and provides efficiencies for the firms. So what we're seeing now globally, the global firms and national networks are developing their methodologies based on ISSA 5000, and those methodologies can then be applied globally across their networks. Next slide, please. So the key for preparers in understanding how to make sure that the Indonesian sustainability data is assurable and that entities are ready and able to move to assurance in due course lies in understanding what the assurance practitioner needs to do, as set out in ISSA 5000. Now, I'm not going to go into massive detail because the standard is 200 pages long and that would take me quite a few days to explain it all to you. And if you want to know more, we've got webinars on our website that goes into all that detail. But I just want to touch on a few aspects that sort of highlight what the preparers need to understand about assurance so that they can be prepared for that. So when accepting the engagement, the practitioner is required to consider whether the entity has a process to identify the sustainability information to be reported. That is, topics that will be covered in the report based on the matters that are material to users, and that a suitable reporting framework has been applied. The practitioner will need to evaluate whether they expect to be able to obtain evidence needed And of course, that needs to come primarily from the entity, including whether the entity's systems and processes are in place to capture the sustainability information, record it, and measure or evaluate that information. Finally, the practitioner determines whether the engagement exhibits a rational purpose. So that may include consideration of whether the scope of the engagement or the topic selected for reporting may be useful or otherwise may be actually misleading to users, which is obviously not the starting point for a good sustainability assurance engagement. So it needs to have a rational purpose. When planning the engagement, the practitioner will determine and consider materiality. So they'll need to understand how the preparer has identified the intended users. So as a preparer, you need to understand who those intended users are and what their information needs are. Otherwise, you don't know what's going to be material to them. They may be different between the frameworks focused on the entity's impact on sustainability, which you currently have under POJK 51, or a framework focused on the financial impacts, which you are moving to in PSPK 1 and 2. So there's a different focus of who those users are and what they're concerned about. So the practitioner's overall strategy and engagement plan might necessitate work to be conducted during the period. So that will be important to understand as a preparer and require access to personnel records, and again, the entity will need to provide that. So in undertaking the risk assessment, the practitioner identifies and assesses risks of material misstatement. That requires understanding the components of internal control. I mentioned internal control a moment ago, and that internal control should be addressing risks and enable the practitioner to rely on those controls in order to reduce their detailed testing. If controls are poor, then it increases the likelihood the practitioner will not be able to obtain sufficient appropriate evidence, or that misstatements might not be detected or corrected by the entity. So in order to reach a conclusion, the practitioner needs to have that evidence and needs to determine whether, in fact, that sustainability report is free from material misstatements. So moving on then to the next slide, and my time is up, so I'll try to move through quite quickly. The IAASB's ongoing work is to make sure that there's clarity around how ISSA 5000 is applied globally in order to support that consistent implementation of 5000 across practitioners, firms and regions to ensure assurance reports are comparable and easily understood. So we're working with on early identification and prompt resolution of implementation issues of global relevance in order to drive that common approach globally. In response to issues, we're developing a number of resources and encouraging stakeholders to leverage those resources in the regions for capacity building and education at the jurisdictional level. Next slide, please. So this is the final slide, which just is capturing the resources that are currently available on our website. So we've developed quite a number of resources, and I definitely point you to the implementation guide that we issued earlier in the year, and you'll find these materials provide in a number of different formats: webinars, guides, FAQs, videos, and we've got illustrative reports in quite a number of different formats to get the information needed. And we're drawing on a number of resources and sources of implementation issues to keep us informed, and we will continue to issue this material going forward in response to the implementation issues identified by our stakeholders. So just in summary, and then I'll wrap up and pass over to you, Cyril. ISSA 5000 does provide that global baseline for sustainability assurance that caters to all entities, jurisdictions and suitable reporting frameworks. It's a comprehensive set of principle-based requirements for robust assurance engagements. It can be conducted by any practitioners who have the necessary assurance and sustainability competence, And the result of using the standard is consistent and comparable assurance reports to give confidence and trust in that sustainability information reported and reduce fragmentation across jurisdictions. So thank you for your time. I'll pass. Shall I pass directly, Cyril?
Yeah.
I'll let you pass.
Okay, thank you. Thank you, Claire. Thank you, Claire, for showing how ISSA 5000 actually can anchor the trust. Because if there is assurance, the trust will be increased, hopefully, and the information inside the sustainability with the assurance can help us to manage the risk of the greenwashing. That is the actually problem, the main problem that we are combating by using the standard for reporting and also standard for assurance. So now let's turn to the investor lens for the next one. I would like to invite Bapak Darwin Cyril Noerhadi to share how investor actually respond to this sustainability risk and how the investor feel if assurance is there. So please, Pak Cyril, time is yours.
Well, congratulations for the 68th anniversary of Ikatan Akuntan Indonesia. For sure that 68-year-old is older than mine. And very good afternoon, ladies and gentlemen. Thanks for the organizer inviting me as panelist along with the distinguished panel members. Thank you for the first two speakers are actually definitely accountants explaining assurance. And this time, actually, I'm sharing more from different perspective. The title is asked for me to speak is Capital Gatekeeper, How Proactive Environment, Social Governance, Risk Management Becomes a Currency, a Daily Life for Indonesia Investment Authority, or INA, in making investment process and investment decision. So next slide, please. So given the time constraint, of course, and the slides to share, I would briefly explain the first half of my slides just through briefly, and then the second half would be key points. Now, when preparing this topic about beyond reporting, I would imagine that a financial statement is not only seen from producer perspective, which is then give the opinion by the external auditor, but also, most importantly, as a user and consumer perspective. And this more relates to investment process and decision. Then the question is whether a financial statement is useful for understanding risks and making investment decision. So if an investor asks that question, hey, read financial statement, make decision. The answer is, short answer is definitely very useful and important, but not sufficient. Why? So to answer this, I would first share the thought process that drives actions. And this relates to some related knowledge to accounting, such as legal, governance, ethics, moral, and inevitably philosophy 101. First, ethics. We've been hearing from the beginning, opening of this session about ethics. Very important. Involves guiding human behavior and moral values. The principle of right and wrong. That's basically what it is. And one could keep asking, what is right and what is wrong? And this becomes an endless debate. Practically high persistent ethical standard would gain trust. Second is legal. Actually, to set the minimum standard accounting practices for an organization. And then governance on the right side is to guide leaders making decision. Because in organization, there's an organ to it. I will explain on INA context. Last but not least, I would say that accounting is a tool of knowledge to measure performance, in this case, an organizational performance. So imagine that we heard about Tani Hub, Investry, what else? E-Fishery. In startup business, a lot of cases, fraud. Why that happened, despite these audited accounts available. Even in the US developed market, we know that, for example, Theranos is in developed market, there's a case. So, aside beyond numbers, ethics are very important. Next slide, please. So this slide further mentioned after other related knowledge of accounting, economy, finance, and investment to achieve an ideal world that is reflecting trust, accountability, accuracy, and fairness for making investment decisions. Accounting system ensures definitely the accountability, transparency, and integrity in every reporting period. This is very important indicators, again, to measure performance. Whether performance meet the standard or meet the expected return from the investor is different matter. So the first two slides I mentioned is really the foundation and very important elements to explain and become the base of creation of INA, Indonesia Investment Authority, as an institutional investors to operate beyond reporting. Next slide, please. Now, INA mandate is to actually co-invest alongside with other investor, either international investor or local investors. If we go from the right side, the end, of course, we would expect that financial statement of INA would definitely be accountable, reliable, and fair. But that comes from the very far end. We need to actually demonstrate how INA is created. Now, it should also answer the questions to the potential partners, such as what legal established INA, what certainty and protection for INA's partner. So governance is also important in managing conflict of interest. Again, in making investment decisions. Clarity of protocols that those who have conflict will have to disclose and abstain from making related decision. This is the key to gain trust for a potential partner. Next slide. So detailing this concept is getting more, sleepy. Supervisory board is the first organ set up by the law. There are 2 + 3, meaning 2 are the ex officio, chaired by Ministry of Finance, and the other ex officio is Ministry of State Enterprise, which replaced by head of the State Enterprise Regulator recently by the law. And the 3 means the independent supervisory board members. The rationale behind it is that what is the key indicators performance for this institution as an investment co-investor side? It's really deployment of investment, performance of investment. So it has to be members that understand the industry context on the investment. So that's on the supervisory board. It's not only supervising, but also electing, appointing board of directors on the right side. There are 5 board of directors. Now, supervisory board also have 3 committee. This is governed by the implementing laws, peraturan pemerintah. So it's very clear how it's structured as such that there is an audit committee who actually evaluate internal control systems, and then ethics committee as very important to govern whether there are potential conflict, as well as whistleblowing system. Because institution is run by individuals. Individuals sometimes do not follow the system, procedures. And when they deviate, it has to be reporting system, mechanics, which is whistleblowing system. And that comes check and balances. Last one, it's very important as well, remuneration and HR committee, because the budget is approved by directors, proposed by board of directors, sorry, and approved by the supervisory board, it has to be somewhere independent check balances by the committee. In this case, remuneration committee. So this again, to mitigate the conflict. If we look at the decision-making process and there is an issue with that, it starts from the conflict of interest between itself and organization, which prioritize. I think that is very important. Therefore, there is a committee on remuneration and HR committee. On the right side is really the executive board organs. There is a committee investment, risk management, portfolio operation, and conflict of interest again. Next slide, please. So I guess that is the foundation of INA, and this is the result after 5 years. Injected 5 billion equivalent dollars to INA by the Ministry of Finance, by the government. And then today, after 5 years, double the size, about 10 billion. And some investment sectors in transportation, toll road, logistic, infrastructures, digital, telecommunication, renewables, advanced material, healthcare. So those are variety of sectors and have special, of course, uniqueness in terms of business natures. Next, slide 7. How do we value the investment? Particularly mentioned about the sustainability and just mentioned about the pre-transaction and post-transaction. The investment process starts with the analysis and review to a point where the committee proposed the early investment memo to discuss at the investment committee member. And once it's approved, become final investment memo. But the sustainability risk rating, what most important here is the due diligence process. So due diligence process would actually complementing so much so to the financial statement. Because sometimes we still need to verify to what extent that further information relevant for return, expected return, be needed. And then the recommendation. I would say that due diligence report is just like health checkup. Health checkup of yourself. If you're thinking wants to be an athlete, marathon athlete, today you have a health checkup, hey, your cholesterol is too high, you better have a program 6 months to make yourself become ready for marathon athlete. That's the way I would say that due diligence to make the organization that we invest ready to comply with the standard for ESG. So this is the roadmap. And next slide, please. This is the factor influencing investment decision making risk. The question is, what is, of course, risk? Risk exposure, they are at least mentioned here. 10 risks is simply variability of factors influence in achieving goals. So I give you examples. If the goals is to get the return, target return is 18%, just like Pak Suhasil giving a target inflation rate 3%, the realized is 2.7%. The target investment return 18%, let's say 3 times of the economic growth. What is the realized? We never know until we sell the asset. And during the life of investment, we have to really manage the risk. And these are the risk-related factors to it that have to be actually mitigated alongside with the other factors. So the investment decision in the project, we could start with greenfield, for example. There is no really financial statement on greenfield except for land bank, and then you have to start something. So partners are important. Who are credible partner, reputable partner that have the experience in building the project. So this is the factor influencing an investment decision making on risk. Next slide. proactive risk management and compliance actually reducing the risks and consequently reducing cost of capital. And given the cost of capital lower, the return would be attractive. That is approach that INA has been doing, and that requires team to understand the substance in a way industry benchmark. If we invest in the healthcare, how other hospital or other lab or other similar player perform, how their margin, EBITDA margin, gross margin, profitability margin, operational excellence are actually performed. We have to benchmark that, and then we have to think about improving either the business model or the business process itself. And then, of course, other liquidity, cost efficiency. So proactive risk management and operation, as well as compliance is the utmost important, would definitely reducing cost of capital. Next. So this reflects INA on the right side bottom, governance, sustainability, and resilience score. Our score actually rank above average, is really, let's say, 53, the average. INA gets 64 score. And INA is full membership of Sovereign Wealth Fund, international members. There are 120 over international member of Sovereign Wealth Fund globally. And in terms of age, INA is just 5 years old, comparing the other in average 24-year-old. So just this is a brief performance. Next slide. Just 2 more slides. Harvard Business School recognized and initiated INA to be the case study in this fall 2025, together with Faculty Economy and Business University of Indonesia, for a reason that there has a legal governance, risk management, and performance of INA. It was surprised that why HBS, Harvard Business School, initiated the study. The answer is there are $137 trillion globally investment money. 10% are sovereign wealth fund, 13.7 trillion. And of that, INA was the fastest growing. So that is attract them to make a case study. Next slide. So this is a greenwashing that was presented earlier. How do we actually mitigate this? There are actually, we need to understand in terms of, some important factors to avoid governance red flags in the corporate practices in general. Last slide. Next. This is really basically some action, type of risk to mitigate on INA sustainability risk management, the framework, the 3 lines of defense, and lastly, the management implementation. To conclude, INA practices is based on the law and operates with proactive GCG approach, including sustainability risk management as well as compliance for impactful investment to create sustained value for society. Number 2, positioning INA to drive as trusted local investment partner would mitigate investment risk by integrating ESG in the investment process. HBS, Harvard Business School, actually initiated INA case study that legal governance, risk, and performance are one of key success factors. And last one, steps to mitigate greenwashing in investment are actually verified by third-party ratings, checking alignment, and avoiding misaligned portfolio holdings. I think that's all, Prof. Linda. Thank you.
Thank you, Pak Cyril. Give Pak Cyril a big round of applause. Thank you so much for grounding the discussion in a real investment decision and have a credible sustainability risk management effect the capital allocation. Thank you so much. Finally, I would like to invite Pulkit to present the global benchmark and the role of our profession in the emerging Asia's sustainability strategy. Time is yours, Pulkit.
Thank you, Prof. Linda. May I borrow the clicker? Thank you. Selamat siang. I hope everyone's doing fine and still awake. I'm going to try and use the clicker, so if somebody can give me back control, and I'll spend a couple of minutes talking about the sustainability developments across the world. I'll also focus on how they are impacting Indonesia, as well as the context in which we are in this room, in the largest economy of ASEAN, and how we are shaping in ASEAN. So let's have a look. I'll talk primarily about two things. The state of play of sustainability reporting, which has been mentioned by Rosita as well, but also attempt to look across PAOs and across the sectors. What are some of the considerations and some very fresh, hot, off the press reports that we'll be introducing to you today. In terms of the global adoption of IFRS, Rosita already mentioned multiple jurisdictions, but what I think is really important to take back is as regulations come in, the state of each jurisdiction's response to those regulations is different. We all know the primary precursor of these developments globally. And we also understand how European Union, United States has responded according to recent developments. As of June 2025, when we looked at ASEAN, 85% of ASEAN GDP has started or signaled that they will be aligning with ISSB as the global baseline. 85% of GDP is equivalent to 2.5 trillion US dollars just in ASEAN alone. Now, in addition to that, Japan and China have also indicated their convergence to S1 and S2. Now, why is that important? That is fundamentally important, and I'm glad there is an investor here, because Asia is the global supply chain base, which means across Asia, including ASEAN as the global supply chain base, while the world has gone left in US and European Union, Asia is going right. What does that mean? That means Asia has the talent, the capacity, the appetite, the investors, in order to create what I call the formidable talent of the next generation of professional accountants. That is the opportunity we see at ACCA. Now, in order to document that opportunity, we were commissioned by the ASEAN BAC, or the ASEAN Business Advisory Council, during Malaysia's chairmanship year, and it'll move to Philippines next year. And we did this sustainability reporting in ASEAN and an overview of current developments. What this indicated to us was clearly that there are certain recommendations which are necessary for us. And I'm so glad that we have IFAC here, we have the global regulators as well, and standard setters, including regulators here today. Our recommendations was simply there should be one set of global baseline standards. Because we don't want a sustainability book or a financial or a non-financial reporting book in Hanoi to be different than another book in Jakarta. It's difficult for investors, it's difficult for everyone to make sense of what is comparability, materiality, and so on. We also said that we should, as ASEAN, take transition relief from ESRS. It's a very important recommendation we've put in front of the capital markets, the investors, as well as policymakers and regulators in this report. We've also mentioned one very important element, that ASEAN needs to have a voice, a collective representation on the ISSB board. ASEAN is no stranger to development. We've lifted millions out of poverty. We've also created one of the fourth largest economy. And today, in Indonesia and Jakarta, we are in the fifth largest economy in the world. And therefore, the adequate representation on the ISB board is extremely important for a collective ASEAN voice. We also gave another recommendation that none of this is going to be possible unless there is significant investment from the investor in the private sector and the public sector all through the ecosystem in capacity building. Capability in human development, professional accountants is essentially important for those who've actually been a part of professionals of this wonderful profession. As I mentioned at the very beginning of my speech, 10th of November, a couple of weeks ago, launched on 10th November, we have released a sustainability report tracking progress globally. Now, I'm not the best speaker here today. There are formidable, talented people before me. So what I thought is I'll do a cheat. And I'm cheating myself and the panel, and I'm going to play a video. So that's going to be even more interesting for you. Ladies and gentlemen, please have a look at this video, which summarizes this report.
Global insights tell us that organizations across all sectors need sustainability information to be more resilient. 53% worldwide have started creating and using sustainability information, but not everyone is committed. Progress. Tackling these threats presents opportunities to create sustainable profits. Organizations unaware of this risk not reaching their full potential while becoming less competitive. Assess resilience and drive value creation. Building resilience involves creating interconnections between being sustainable and being profitable. Regulation is the strongest force shaping the sustainability agenda. Get guidance to focus on issues that matter most. Navigate the reporting landscape using all policy levers. Be transparent across activities and the value chain to provide stakeholders with information about regulatory compliance, financial impacts and non-financial impacts, managing risks, and the resilience of an organization's strategy and business models. Know your key resources and who provides them. Not providing information or over-reliance on estimates has implications on the value chain, weakening access to resources and finance. Embed sustainability information as part of relationship management. Senior leaders and the accountancy profession must be at the forefront of adaptation. Start now and think ahead to build momentum. We need to focus on end users when developing agile systems and processes. Implement systems and processes for both internal and external users. Organizations need to better connect sustainability and financial data. They must develop a sustainability information strategy that flows through governance and provides access to knowledge and skills. Be flexible in finding talent with the skills you need. An organization's strategy for managing data and insights must support decision-making and measuring progress. Prioritize information required by the organization and value chain. Remember, it's an iterative and collaborative process. You don't need to face this challenge alone. Work together in taking actions and building capacity, and help eliminate silos. Explore our report on readiness to create sustainability information and discover ways to collaborate and consolidate efforts while managing the challenge and developing your skills. Let's build a sustainable and resilient future together.
Thank you. So I'll just summarize these recommendations. What we're looking at across this survey of 1,000 professionals, variety of sectors and organizations, is regulatory impact is a driving force. It is a driver of change. How can we harness that? How can we actually optimize the number of stakeholders? Now, if you look at my previous presenter and their slides, as consumers of information produced by preparers and assurers, is to really make decision-grade information possible. Taking decisions by the quality of information that's coming to them. So we do have to work across getting that quality information put together. We're also looking at champions of change, and championing sustainability will very much depend upon who is most entrusted in an organization, public sector, private sector, to translate any activity that an organization does, any value that an organization creates into financial information. That's the accountant. So building that flexible resourcing model is going to be really important. We've got to act now. By the end of this decade, we will all be looking at sustainability reports, making sense of them, taking decisions by them, justifying allocation of factors, capital, basis, all of them. And that's not far away. It's already the 3rd of December. In a few days, it'll be the 2026 as well. So please do act now. The next is priorities that I wanted to mention. And when we ask which of the organizations require the most, the insight is very simple. Board. Board requires this most, and that's where we have to make the change. When we ask what activities do you need, how do we support you in developing capabilities, and they are looking for external help. They're looking for help, where to go. Insight for professional accountants with more experience. So it's survey after survey coming up that it is very important for professional accountants to take the mandate forward. What role should professional accountants have in the creation of information? Compliance, number one. That's usual. Trust, information. But there's a lot more around collecting data. Why ACCA? I just wanted to highlight that we've also committed to our own paths to net zero. So we are speaking on firm commitment towards being carbon neutral by 2045 and reduce 50% our emissions by 2030. ACCA's capacity building is very well documented in this space. Please do have a look at this QR code. This will be made available to you after, but we have dedicated a full section called the ACCA Sustainability Reporting Hub, which gathers all our materials, including the work that we do with IFRS Foundation as their capacity building partner.
Okay, sorry, the time is up.
Yes, last slide.
Okay, thank you.
And I think just to bring it back is we're also working with PAOs to qualify it here. We've also supported and worked with IAI on co-branding our certificate for sustainability in finance. And also this year, just a couple of months back, launched the IAI ACCA joint certification in the professional diploma in sustainability. Thank you.
Okay, thank you, Pulkit, for connecting the global picture and the evolving expectation on accountant. So it's only around 20 minutes left. So I will give the question to each of the panelists around the greenwashing. As all of us in this room, we may be aware that the starting point of having the global standard for reporting as well as the assurance is actually triggered by the issue of greenwashing. This is actually happening in the academic research that we have done, maybe 15 to 20 years back, and also it is really faced by the practitioner, especially maybe the investor. So there is, they found difficulties in comparing the sustainability report because they are based on a different standard. So maybe I will start with Claire, asking Claire first regarding just now you mentioned about combating greenwashing using assurance, right? So that to be able to have a more trust on the report itself. Your question is, how does the assurance actually can contribute to the combating of the greenwashing? And just now in your slide, you mentioned about the underpinning assumption or condition that should be there, which is ethic and quality management. Can you please explain around that point? Thank you, Claire.
Yes, for sure. Thanks very much, Professor Linda. So yes, indeed, independent assurance is a really important safeguard against greenwashing, as the assurance practitioner brings independent scrutiny to the sustainability information reported by the entity. So that's, that's really a critical element, as I mentioned earlier, about that ecosystem. The objective, as I also mentioned, of the assurance practitioner when providing their assurance report under ISSA 5000 is to obtain assurance about whether the sustainability information is free from material misstatement, whether due to fraud or error. Now that does encompass greenwashing. And greenwashing might be seen as a deceptive or misleading practice, perhaps designed to make people believe that the entity is doing more to protect the environment than it really is. And of course, there's other types of washing, not just in relation to the environment, but in relation to, say, social, ethical or human rights issues that could be also being misleading users. So really that the insurance engagement is really targeted at that, assessing the risks of greenwashing in terms of its susceptibility, perhaps through, the incentives or pressures that management face that could drive them to greenwashing. It also requires, ISSA 5000 requires the practitioner to be alert to indications of fraud or error that again encompass greenwashing, and also to maintain that professional scepticism that underpins the conduct of an assurance engagement. So that reliable sustainability reporting ecosystem that combats greenwashing does require assurance to provide that confidence and trust in the sustainable information.
So around the assurance itself, is actually the ecosystem should be there, right? Should exist. Because for us, professional accountant, we have the ecosystem already there. We have the ethic, and then we have all the standard. But how if we open it to not public accountant for this? Are there issues that we have to also be alert upon? And also we have to be ready, because just now you mentioned about the quality management, right? If we are talking about quality management, is the whole process of the audit or the assurance. Can you please elaborate on that?
Yes, absolutely, for sure. So definitely, if professional accountants are involved, they are familiar with the Code of Ethics and also the ISQM1 that provides quality management. And as I said in my presentation, the engagement quality management is embedded in ISSA 5000. But if other practitioners are doing these engagements, they must also apply those relevant ethical requirements and quality management. And that is not negotiable in ISSA 5000. It's a critical underpinning of that conducting that engagement. And it feeds right through, as you say, the standard. Now, there is the possibility within 5000 of requirements at least as demanding. And it's really up to the jurisdictions, the regulators, to provide, if there are alternatives within your jurisdiction, perhaps in legislation or other means of providing the equivalent to the Code of Ethics and quality management. But that is critical for any practitioner.
Yeah. Fully agree on that one, because there is also a revision, right, for the ethics standard that we adopt as a professional accountant. Thank you, Claire, for sharing that one. Maybe I will move on to Cyril around greenwashing issue and the integrity. What is actually your point of view in combating this, and what do you hope as an investor on seeing this one, especially when we have the standard for reporting and standard for assurance? Is there any relaxation for the greenwashing issue? Please, Pak Cyril.
Yeah, I think, I would think that greenwashing, of course, refers to, could mislead people into thinking that the environmental or socially responsible actually is less than what it's supposed to be, less than the facts or the truth. So that is so-called greenwashing. So it could mislead people in making investment decision. So the question for that, eliminating that risks or mitigating that risk or understanding that better is to definitely verify that whether that information is really credible. And with third-party ratings, that is definitely important. And I think, again, I think what Claire's saying, in the future, hopefully the assurance level it's improved, and to a point that the regulator could also definitely enforce that. That would help to some degree. But still, at the end of the day, investor be responsible to themselves in terms of generating return, and it's not or minimize being misled by the information. There is a case also, information, as I think mentioned earlier by Bu Nelly, right? Case on the startup business is misrepresentations of account. And how could that happen, for example? It's several global investors investing in that startup business, but still happen. So the question, if we try to see what went wrong with it, is something else. Of course, the legal action is a different case. But how to improve that? I think that's a question in terms of avoiding another misrepresentations of accounts. We don't know whether there's a fraud or not, but the accounts is definitely misreps. So that is the situation that ethics definitely important to gain trust. I think that's.
Thank you, Pak Cyril, for the point from your point of view. Maybe I would like to ask Bu Rosita, as we all are aware that the preparation now, hopefully by 2027, we will be using PSPK 1 and PSPK 2 and moving forward more financially connected. So in your point of view, Bu Rosita, are those standards can combat the greenwashing issue that we are facing now, or it will be the same like what we are facing now?
Yeah, this is very good question, Bu Linda. So I think we are agreed that with this new standard, it is more useful information for the investor because they are linked to the financial impact. They are linked to the financial reporting, right? But if we don't do it right, meaning the ecosystem is not created right, it's even more. Why? Because now we are talking about financial impact, meaning we have to disclose current, short-term, medium, and long-term financial impact. How do you think the company will do that? They will use assumption, estimation, right? So if we don't have a proper infrastructure and ecosystem, then this is even more bigger, the greenwashing. Therefore, yes, it is a game changer. This is a very good standard because it's more useful to investor, but we have to be careful. How to ensure the information provided by the company is transparent and reliable? I think the first thing first is the role of the regulator as oversight body, and number two, assurance provider. Therefore, I'm really concerned about how Indonesia will structure the assurance ecosystem. Because if we look at the financial reporting, how long we have been in the assurance mode. I think more than 50 years, right? But still, the fraud is still there, even with that sophisticated infrastructure. Public accountant is really in a very high pressure with the sanction, with all the regulation. Still, there is a fraud. So now the question is, we are now in the preparation of the government regulation of the sustainability. Ada Bu Sophie di sini. So it's depend on how we framing the infrastructure in the PP book. If we are not careful in structuring this, we are in a danger situation because we give opportunity to make the condition even worse. So I heard some of the idea to expand the role of assurance provider for the sustainability to non-public accountant profession. I think there are some country which has that position. I think we have to be careful with that position. Maybe in that country, the non-public accountant has a more robust ecosystem. But if you look at our position now in Indonesia, even in a public accountant, we are still need to improve ourselves. Now you have to expand it to non-public accountant. I think this is something that we need to discuss and decide carefully before the PP, the government regulation, is issued. I think that's the message, Bu Linda, because we have a very good standard now. We don't want to waste this momentum because we structure it not properly right. We open too easy for non-public accountant, but without really careful analysis. So what list that we need to do before we can expand it to the non-public accountant? This is something that we need to consider. Thank you.
Thank you so much, Rosita. And we have to remember that it has to have connectivity with the financial statement, and the financial statement are being audited by the public accountant. So I think we have to put underline on this to be able to take position which one is better off to do the assurance. Okay, now let's hear from our profession representative, Bapak Pulkit Abrol, in this issue, how actually the greenwashing can be combated by the profession and what is actually we have to do as part of the accounting profession itself. So Pulkit, please.
Yeah. I think the standards that have been spoken about today do confirm that when you look at sustainability professionals, there are certain sustainability aspects that require deep expertise. Yeah. Carbon accounting, for example, human rights, for example. So I think these are the contributing factors to considering the decision that Ibu Rosita has just mentioned. Would we open up the profession to allow for other sustainability experts? And I'd like to do a parallel example from what an accountant does. An accountant does not have to be a deep expert in sales and marketing, does not have to be a deep expert in business development, but they still represent the financial contribution and impacts of that aspect of an organization. So in the same sense, the IAASB and the ISA 5000 does say that any sustainability information that's prepared does follow through competence, trust, and ethics. And I think those are very important aspects. You can't expect a quality management ISQ 1 to be done if there is a provider who cannot do that. So anybody who is going to do any assurance has to follow the quality management standards. Yeah. And who is best placed to do that? The professional accountants in firms. So I think it's a very demanding quality management standard as well. It's been very well formulated. And we can't talk about assurance without independence and ethics. So I think in that sense, the role of the professional accountant becomes even more important when it comes to the assurance aspect, which I think is a very important net when it comes to greenwashing.
Okay, thank you, Pulkit, for sharing. So I was reminded that the time is up, over 20 minutes already. So I just want to make a conclusion on this session. One is we are not just focusing on the reporting, on the compliance, but we have to move on to also seeing the risk, the strategy, and we have to revisit the business model to be able to adhere to the changes. Second, trust is the key, and our profession is actually profession of trust. So we have to uphold this so that this can be maintained and sustained in the future. And the last one is the accountant role is actually expanding. So it's moving beyond the numbers, and we have to complement actually the numbers with knowing the business model, the business process, starting from the risk that entities are facing. So I think I will end this session. Thank you very much for staying with us until 20 minutes over. And once again, on behalf of Ikatan Akuntan Indonesia, I would like to thank our distinguished panelists, starting from Ibu Rosita, Miss Claire, Pak Cyril, and Pulkit. And all of you participants for the active engagement, because you are still there and you are not sleepy. Thank you so much. And I will give back to the MC.